All right, good evening, everyone. Welcome back to Market Wrap. Today we have Arjit, of course, a SEBI-registered research analyst. Nifty, we saw almost very flat today. And in this session, we'll also be talking about a couple of stocks like BSE, BHEL. We'll also be talking about DMart, which we covered in the previous session as well. So, Arjit, thank you so much for joining, and let's get started.
Thank you so much for having me, and let's quickly get right into the markets. Like what really happened today and what's up with the market. So we can see Nifty here is exactly at a resistance point. The first point that we had marked at resistance on 4th of May, the last we connected, the level was 24,350, and today's closing is exactly near that at 24,336. Now 24,336 is the point that was the provisional closing. The final closing has come down to 24,326.65. Okay, 10 points down, but the important point is that we are near the first resistance on Nifty. And on top of it, let's really look at where the Sensex gave the closing today. Sensex was also close to 78,000 at 77,895. The final closing was 77,844. Okay, again 50 points down. But the important part of the day was that today's Thursday, Sensex expiry. So today's day was supposed to be volatile, and that volatility we can see here in this candle at 12:15. You see this huge wick that came in because of a very I would say news that was not expected by anybody, and many news houses, credible news houses like Bloomberg, you say CNBC, ZViz, almost all of them, for a second, they thought that this is a fake news that is coming in. So, what exactly was that news that triggered two sudden huge green candles in the market? Well, according to, again, unverified news, hai, there are no credible information around it, but the news was still being shown on the internet. So, the news was that Pakistan said that there was a deal that was happening between Iran and US. So it was probably a deal either to end the war or to open the Strait of Hormuz. Now, this is a very hot topic for the market, even though it's been over 60 days now. But still, this topic that ya to war is ending or the Strait of Hormuz is opening, this is still a very hot topic for the market. And the news sources, the websites that came up with this news were Al Jazeera, Al Arabia, and Arab News. All of these platforms are known for giving you fake news and unverified news. So that is why, again, there was some unverified news out there. But the important part is the news was there. Even if unverified news was there, even if manipulation was happening, again, we don't know if this was manipulation or this was actual news because there is no official confirmation yet from either side, either US or Iran. None of them have confirmed that they're even trying to talk to each other about any of these things. But still, hey, it's markets, right? There are news-based movements in the markets almost every day. So this was the news that really drove the markets up at the midday today. But then right after, when people realized that this is not confirmed yet, we saw a small profit booking and we closed near 24,350 on the markets today. So yeah, broadly, this is what's happening in the market. If you look at the previous trading days as well, yesterday we saw a huge move from 24,000 to straight to 24,350, and before that we again saw trading near 24,000. So if you look at the trend historically, you come at a level, you trade around that level for some time, and then you give a breakout at the next resistance level from that particular level. So if the trend continues, if this kind of movement continues, we are again near 2350, 24,350. We are consolidating there. There are a lot of candles there, a lot of volume accumulation that is happening here. And now, if anything positive happens, we might see again, just like how we saw 24,000 or 24,350, we can see two straight candles taking us straight to 24,533. Now, this can only happen if there's some positive news. कुछ negative आएगा तो दो candle में will come down to 24,000 as well. But hey, it's markets, right? It's our job to tell you which direction the market is going and what's really happening in the market. So yeah, broadly, this is all the action for the markets for the day.
Got it. Now, let's also look at the look at the global and the not only but also the commodities market as well.
Sure. Let's quickly look at the European markets as a part of the global markets. Let's look at Europe first. So, Europe may the very first index that comes to my mind is the French index, which is CAC 40, and that index again a very strong rally that we've seen in the past trading sessions. We look at 6th of May, which was yesterday. Strong momentum here, and what we can see here is that CAC 40 is still in the range that we have marked. This range, if we extend this rectangle drawing again ahead a little, we can see it's still in the range. It did reach the upper level of that particular range, but it did not go out of that range. It did not try to reach out to 8452, which is the important level that we have marked. So until it's in the range, again, it's a wait and watch stuff. Either you need a breakdown below the range or you need a breakout above the range. जब तक रेंज में है you are not very sure what would happen, but because of the broad rally that we see inside the range, the sentiment from French market is positive. इतना हमें पता है. Next, let's look at DAX, which is the German index. If you look at Germany, the important level of 24,747, I remember we had marked this as a break or make or break level. It was that is why we colored it in the black. Yeah, ये तो make or break level है, पता नहीं यहाँ से क्या होगा. That is why this level we had marked in black, and now we are seeing that in the previous session this level was breached concisely. Very good rally we are seeing. Again, अच्छे खासे तरीके से with volumes there was a good rally. But again, profit booking came in and we are close to 24,800, 885. So again, it's entering a range here until unless we see a strong rally until 25,500. I think the sentiment here also is mostly sideways. But the broad indication that the German markets are giving us is because these 3 to 4 green candles with strong volumes that we've seen, low wicks, strong body, they indicate that the price here is ready to stay. The price, this level, these levels won't be broken very easily. So that is the sentiment that the German markets are passing over as well. Strong movement, strong sentiments, and decisive move coming in from French and German markets. Let's look at the UKX as well, which is the UK 100, the Europe UK markets. And things are not going very well here either. We are seeing a downtrend already. A small uptrend we saw, then again, it was an M pattern, an M pattern ka breakdown we saw. And right near the breakout level, जहाँ से everybody would expect a reversal. We saw a nice huge rally coming in the UK markets as well. Although now the rally is fading away, but the broader sentiment which is coming in from these three candles is also positive, right? So overall sentiments are positive from the European market. If you look at the Asian market over here, Asia was already green. You see Japan was 5% up. Uh, China, Hong Kong, all of them were 1% up. Korea was 1.5% up. Taiwan as well, near to 2% up. So overall, the sentiments from Europe, US, Asia, all of these markets were in the green yesterday. So the sentiments are positive. Now, what comes ahead is important. So you see here Dow Jones futures that is positive, slightly flat, but flattish positive. So that is something that we have to watch overnight today. If you look at the European market, as we just saw, yesterday we saw a really positive movement. Everything was green, but today we're seeing a little profit booking coming in all of the European markets. You see UK, France, you see Germany, everywhere there's a little profit booking coming in. So again, sentiments are mixed. You look at Gift Nifty, although it's not trading right now, but you look at Gift Nifty, that's also flat to red. But yeah, so overall, we'll have to wait and watch for what really happens globally, because the news that came in, the fake unverified news around the US Iran deal, that is very important thing. That's like an important trigger to watch, because that is something which will move crude oil as well. If I would quickly load Brent crude, you would see Brent crude is also trading around $100. The last time I remember we talked, it was around 120, 118, 119, and everybody was panicking in the market. यार, what's going wrong with the crude oil? 120 मतलब हद होती है यार. And then we saw that there was a sharp you see fall in Brent crude all the way from 112 down to 102. A 10% fall in just a couple of hours. That was the sharp fall that we saw in Brent crude. Now, the important part here is we already have the range marked. 100 to 90 is the range that we want crude oil to stay in or below that. It should stay below 90 or in a range of 90 to 100 because $100 is a price which is now like it would give you a sense of safety. Like nothing more could go wrong if crude is below $100. Above 100, volatility would increase. If you look at the price movement historically, when there was nothing wrong globally, there were no new arguments, no new attacks from Iran, US, between all of the Middle Eastern countries, just that UAE had left the OPEC. Apart from that, there was nothing else wrong globally, but still you were seeing that the oil prices were rising. Every day we were above 102, 104, and then dekte dekte we reached 120. Now, that was signaling that something is wrong internally. Something might go wrong or something is going wrong. Volatility is still there. But now that we have crude near to $100, now I think that volatility might decrease. Because, okay, see, if the war ends, everything would end and everything would come back to normal. But it's not that easy, right? That the damages have been done already. Missiles have been fired. There were a lot of damage to other neighboring countries done as well. So things would take a little while to come back to normal. But at least from the market's perspective, if Brent crude is below 90, that would be our safe zone to be. So that is where we want Brent crude. Right now, near $100, we'll have to look out for what really happens with the US and Iran war updates. If everything goes well, very well, we'll have Brent crude below $100 and markets would come back to its levels 25, 24,500 and maybe 25,000 in the upcoming trading sessions. If something goes wrong, we'll see crude spiking again above 110 and then we'll see more volatility and pressure in the market in upcoming trading sessions. Represent.
Got it, got it. I think there was a network error from my side. I was trying to ask the same question that since we got the news of Strait of Hormuz, I'm sure there should be some movement in crude oil as well. And we did see a big fall there. Anyway, continuing, let's look at the sector-wise movements for today.
Sure. So this is a sectoral heat map that I've loaded again for the reference of the users. There's no pay tool that we use here. All of the tools are absolutely free. So if you want to maybe know what tools we are using, you can definitely comment down below and we'll share the link for all of the tools that we're using. Right now, here this is the sectoral heat map for all of the sectors on NSE, and you'd see here the top gaining sector is auto sector. Now, the main reason why auto is rallying today is because of the quarter four numbers and the monthly sales number, all of them combined, which has come, right? So we'll talk about this later, and we've talked about it earlier as well. That what are the expectations that we have from auto sectors, and now we are seeing that auto sector is rallying. So I believe it gives us a verified target hit stamp on the sessions that we are doing almost every day at the market wrap up. On the contrary, you look at the top losing sectors, IT and FMCG are among the top losing sectors, and about that as well, we had warned you that if there are more movements around the war, if there are more movement in crude oil, if there are more volatility out there, IT and FMCG would take the worst hit, including consumer durables as well. Not just FMCG, this would also extend to consumer durables, IT, FMCG. All of these sectors would take a hit if something goes wrong with the war, if things go even worse, and if crude oil stays above $100. And that is exactly what we're seeing. You look at IT loss of 0.7%, FMCG loss of 0.76, consumer durables with a loss of 0.85%. So all of the sectors that we talked about, all of them that were supposed to take a hit are taking a hit today. And broadly, this is the sectoral heat map that we all must look at while trading in the markets. Represent.
Got it. Now let's look at the stocks as well. We have a long list of stocks for today.
Definitely. Before that, let's quickly look at the sector stock heat map as well. So this
Mhm.
is the heat map for Nifty 50 today. You look at the top gaining sectors. We have M&M, Bajaj Auto. We have Maruti Suzuki. From oil and gas energy sector, we have ONGC. Otherwise, utility mein we have power, mein we have NTPC, we have Adani Ports, we have Adani Enterprises. Not very well, not doing very well. The loss of 1%. Apollo Hospitals. We have Shriram Finance, HDFC Life. So there are a couple of stocks. Like if you look at the right sector and the right market cap for that particular stock, you'll find the right stocks to trade in the markets. Although there are a lot of people who might be comparing in the markets today that yeah, our market is flat. There are not a lot of stocks to trade. There are not a lot of sectors to trade. Everything is flat, but you just have to do the right setting on your screen, and you'll get to the right stock automatically. Okay, talking about the stocks that we had to discuss today. Before moving into individual stocks, a quick wrap around of what we talked about on Monday. We discussed BHEL. We had marked three important levels on BHEL: 387, 398, 406. All of the targets have been hit in just three trading sessions. We talked about it on Monday, that was 4th of May. Today, 7th of May, Thursday, and all of the targets have been hit. We talk about DMart. Results are not very great, and we had given a short call on DMart. Like for anybody who has DMart in their portfolio, we recommended to you to sell DMart, and if you have the capital, you should short DMart. And the first target was hit there as well of 4346. Right. So both of the stocks that we discussed, targets were hit. Today we have a couple of more stocks to talk about. To begin with, we have Bharat Forge. Let me quickly load up the charts for Bharat Forge. Now, Bharat Forge is an amazing company. The results for these companies were amazing. Good quarterly numbers, healthy profit margins. The most important part about the results for Bharat Forge is not just the results that they've reported, but the guidance that is coming in from the management. So the management has targeted a 25% growth in the top line for Bharat Forge in the upcoming quarter, not upcoming financial year. They're talking about a 25% increase in revenue in the upcoming quarter. So maybe in the next 3 to 4 months, the next quarter comes in, quarter one, quarter two, you'll see a 25% jump in revenue. And that's a defense stock for you, by the way. If defense stocks see huge jumps, that is exactly the sector that you have to track it. So Bharat Forge is a stock that I wanted to bring it to your focus. The first target here at Bharat Forge would be 2021. After that, I believe it would touch an all-time high. Right, looks like it. So 2021 is the first target. The second target would be 2040, and the third target would be 2059.9 or 2060. And of course, if you're taking a trade, you're marking the target, you're supposed to mark a stop loss as well. The stop loss would be somewhere around with the ratio of 1:1 risk to reward at around 1939. Right. So this is one stock that I had to talk about, Bharat Forge. The second stock, again, Stylam Industries, another company with a good set of numbers. You see strong operational numbers, operating profit. Again, it came in line with the expectation. That's actually better than expectations. Around 11.5% growth in operational profits. You see revenue growth was also somewhere around 20-25%. So Stylam Industries, another good company. Currently trades at 2640. You can look at the company till 2700 and 2800 in the upcoming trading sessions. If you're taking a trade, please take a trade with a good stop loss. So I'm taking a stop loss here exactly at 1:1, 2469. Right. So these are the two levels that you have to watch in Stylam Industries. Now I've got a long list of stocks to talk about, but if I keep talking about all of the stocks, it will take a lot of time. So I'll just quickly tell you the stock name, and I'll tell you why I have shortlisted that stock. So I have Indoco Remedies. Indoco Remedies is another pharmaceutical stock. So I believe a couple of sessions ago we talked about pharma and healthcare, and why I thought that pharma and healthcare is important. Because see, pharma and healthcare, their demand would never go negative. People won't stop buying medicines. They won't stop going sick. They won't stop going to hospitals whenever something serious happens. So pharma and healthcare, these two sectors would keep growing constantly, and that the exact same thing is happening in Indoco Remedies. The company, last quarter they had an EBITDA loss. EBITDA, to simplify it, it's basically operational numbers, earning before interest, tax, and depreciation amortization. So EBITDA is basically your operational numbers. The operating loss, the company was reporting a loss on operational level, and now in this particular quarter, the company has turned that loss into profit. Imagine a company that was loss making is now profitable. So that is the jump that we're seeing in Indoco Remedies, and the stock was also up around 13%. So because the stock has already rallied 13%, there's no point showing the chart and marking the levels on the chart, because again, it's 13% up. It's good if you have taken the trade, please book profits. If you're looking at the stock now, please don't avoid taking any trades, because the stock is already too expanded. 13% up is a little too much. Well, we've talked about the good results. One company with a very bad result from FMCG company is Godrej Consumer Product. So I'll quickly load up the chart. I believe the stock was also down today. Yes, the stock had opened with a gap down today, and you see below near 1000. So I believe if somebody wants to take a trade in Godrej CP, buying trade would not make sense, because operationally the company has reported, I think, the worst result in FMCG sector so far in this particular financial year. I believe the worst numbers have been from Godrej Consumer Products. So if somebody's looking at Godrej Consumer Product, I would say short it with a target of 1000. If you're shorting downwards, your first target should be 1026. The second target would be 1014, and the final target would be 1000. Below 1000 rupees, the stock would be a disaster. So please do not hold the stock. If you have the stock in your portfolio, don't hold it below the price of 1000. This stock is absolutely disaster. See, owning FMCG companies is not bad, but look at the global macros, like what is happening across the globe. Would the company really survive in the long run with its margins, with the increasing inflation which is coming in? How would that affect the consumer durables? How would it affect your FMCG, and how would it affect your own company that you've invested in? It is important to look at all of those factors before selecting the stock for your portfolio. So, right, these were all of the stocks that I had to talk about. Before we end, just one stock, Bombay Stock Exchange. Now, this stock, it has not really, like, the results are not out yet, but the results would be out today. And the reason why I have BSE on my list today is because if you look at the stock for a 5 year timeline, 5 years ago, the stock which currently trades at 3981, back in 2020 when the crash was there, the stock used to trade somewhere around 50 rupees, somewhere over here, 100, 250 rupees, and that is 2023, by the way. If you look at the recent data, let's look at somewhere from 2024, the stock was not even 1000 rupees, and from 800 rupees to now 4000 rupees, the stock has already come a long way. And so this is just point one why I have BSC in the list today. And the second reason is because its results are coming to are going to be released today, and BSC has recently launched its FNO trading segment. Right, I think almost everybody is aware about it. You can trade FNO for Sensex, for BankX, and a couple of more indices on BSE Sensex, on Bombay Stock Exchange. So BSE has surpassed NSE. NSE has been running FNO for a very long time now. It had the majority market share in FNO trading volume, and BSE has now overtook NSE with a market share of 55% in FNO trading volumes. So right, so that is a big positive for BSE. So we are expecting that the revenue is expected to grow somewhere around 110%. I believe the last quarter the revenue was around 400 something crores, and this time we're expecting at least 700 to 800 crores of revenue for BSE. And the profits are also expected to grow at around 60-65% this particular quarter for the year. So, right, that's the reason why we have BSE in the list. Most probably, if the results come in line with the expectations, BSE is supposed to open with a gap up somewhere around 4,200, somewhere around 4,300. So if you see BSE at around that price, you can very well hold it till a price of 4,800 and 5,000. Above 5,000, the stock would again become very risky. So just these are the two targets that you can hold BSE for if you see BSE open with a gap up. If it opens flat, or maybe if the results are not good, then we can very well reconsider. For that, you can follow me on ZBuy's Advisors, where you would get all of the updates around all of these stocks in real time. Vibrata.
Yes. So before we close up, why don't we look at the OI data as well?
Yes, definitely. We missed out on that. So OI data, the interesting part of this session, which I believe almost everybody enjoys that as much as I do. So looking at the option data for Nifty for 12th May is the next expiry which is coming up. So if you look at the OI data here, you're looking at the current strike price is 24,400. and you're seeing that the PCR is 0.55 with highest call OI around 90,000 open contracts. Now, we already know by this, so far, we already know that if call OI is high, definitely the call prices would not go up, right? The call prices would not rise because people are selling that call option. So call prices are going to fall and the put prices might rally. So for that, either if you're taking a trade, either you can sell that particular call option or you can buy the put option of that particular strike price. Now, Nifty again, if you look at Nifty 50, all of the strike prices 24,400 onwards, you're seeing that the call OI is higher. So let's quickly look at Bank Nifty as well, because Bank Nifty was again, we had recommended a trade from Bank Nifty today. So for users again who do not follow us, please do follow me on ZWise Advisors. We have free trades coming in for you for FNO, at least one trade in a day, so you can very well take the benefit of it. So 56,000 is strike price on Bank Nifty, which where we have the PCR exactly at 1.03, which means that the call OI and put OI are nearly at the same point, and and here we can see that the put OI is slightly higher than the call OI, which means if the markets go down, say Bank Nifty, if it falls down, you'll see 56,000 as a crucial support, and on the higher end, you'd see 57,000 as a very good resistance because the highest call OI is here with 27,000 open contracts. So you have a tight range in Bank Nifty. On the lower end, we have 56,000, and the higher end, we have 57,000. If you come back to Nifty, here again, on all of the strike prices lower than 24,400, we have highest put OI, which means people are ready to push Nifty higher. जैसे ही dip मिलेगा, dip मिलते ही people are ready to push Nifty higher. And on the higher end, we have all the call sellers and all of the short sellers who are ready to bring Nifty down. So Nifty, I believe it's more volatile right now. So rather than looking at Nifty, I would suggest trading Bank Nifty because the OI data suggests that there's less volatility in Bank Nifty and more opportunities for you to trade Bank Nifty. Read for them.
Got it, got it. Thank you, Arjit. Thank you for a very detailed session today. Let's catch up tomorrow at 4:30 p.m.
Definitely. Thank you so much.
Thank you.